back to Rob's point around the regulatory framework, I mean, we have a suite of tokenized funds that are effective with the SEC because they're securities. Under the old administration, we also have a trust license, so that's a gold token, to Robert's point about inflation hedge and a stable coin. So in this administration, I think there will be other developments like the stablecoin bill that we're hopeful will get passed and we'll have some more clarity. But I'd say too, around actually the crypto market, it continues to be very interesting, and also now more and more there's dislocation between the traditional markets, which I think also for retail investors in particular, it's an opportunity, while institutional investors, I don't know if people were taken by surprise, but I do think that there's still a lot of opportunity there. And we're very much in the first inning. I'd say even maybe we're at the start of the game, where we're finally getting to a point where all of us have products and the infrastructure and the technology to be able to really affect change. So I do think that it's a much longer road than over the next even 18 months that we'll see significant changes in this, just like we saw, if you think of the advent of the internet or electronic trading. I mean, it's gonna take time, or even ETFs. It's gonna take time, and then we'll see that hockey stick of adoption.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video breakdown, we're going to be diving into some ongoing developments in the XRP ecosystem that are going to unlock DeFi opportunities, showing you guys that financial institutions are 110% interested in earning yield on their digital assets. And now in this early stage of adoption, as you heard this industry-leading expert from Wisdom Tree mention at a recent event that took place in 2025, we are in the early stages. You do not want to drop the ball. You now want to be in the process of educating yourself, hopefully accumulating blue chip digital assets and learning how to generate yield with those digital assets, so that way you can survive long term, expanding, growing your wealth, and staying in the crypto ecosystem, as we now know that everything is moving on chain. With that being said, as always, welcome back. We do appreciate the love and the support. We're going to be diving into some fundamental developments, playing some video clips for you guys, showing you all everything that is happening in the DeFi ecosystem behind the scenes, trying to get the XRP army to wake up and realize that we are entering into an era where we are going to be able to put our XRP to work to generate us passive returns for the first time in history. With that being said, starting here, and if you guys enjoy these types of deep dives, really showing you guys the proof in the pudding, institutional insights, perspectives from some of the largest organizations in the game, do me a favor, smash that thumbs up button and subscribe. So starting here on this post where I said to you guys, we are no longer just in an era of knowing what you hold. We are entering into a new financial paradigm where it is about how you make what you hold work for you. Day trading and chasing price action, that is an old playbook way of thinking. The new era is about asset productivity, automated yield strategies, and sovereign financial control. And I'm going to prove that to be the case and show you guys that people with valid credentials are telling you guys this stuff on stage, and show you all that traditional financial players and large organizations have recently announced that they are going to be utilizing their XRP to generate yield. The new era is about, like I said, asset productivity, automated yield strategies, and sovereign financial control. With tools like Flare's F assets and the ability to liquid stake our XRP, you can now stake, generate yield, and reuse your assets in the DeFi ecosystem. This is no longer just holding. This is deploying capital intelligently. This is the DeFi evolution. So we're going to get into this today, but before we even jump into that, I want you guys to listen to these industry-leading experts. Now, these people speaking on stage at an event that took place back in April 2025 only has 168 views, but listen to what they say about how the ability to generate yield and liquid stake an asset, in particular, they're talking about Bitcoin, adds an extra layer of utility to Bitcoin as a digital asset. And then I want you guys to listen to a panel discussion that took place recently from the Flare community, where they talk about the same exact thing surrounding XRP. And this is going to open the door for you guys in terms of your mental way of thinking moving forward into the future, as to how you do not have to sell out of this digital asset ecosystem for fiat anymore. And instead, you can put your assets to work and pay yourself passive income. Take a second here and listen, because this is powerful information.
Fame is being built. That's where they're tokenizing these things, liquid staking assets, to build DeFi around it. So no, it's not a bad thing. It's a good thing. And I will go and fight everyone who ever claims that liquid staking or staking is bad for Bitcoin. Staking is the one thing in crypto that has PMF very clearly. It's easy. You have an asset, you like it, you want to have more of the asset. one-click stake. Why is that bad for Bitcoin? So I would argue that we already have these things in a centralized way with intransparent yield where people have lost money. Now there's an attempt and a big ecosystem attempt to make them more transparent and decentralized. So, if you're criticizing that, well, then you should be criticizing yields or any form of kind of, voting assets to work overall. And well, what are you doing in crypto?
Brendan, do you want to add anything to that?
Yeah, I'll just quickly add a couple points. I mean, it touched on a lot of great stuff. So just another point is that I think it just enhances the use case of Bitcoin because, if you think of institutions or folks holding Bitcoin in custody, it's actually a negative carry asset. It costs you money to hold Bitcoin, and no one wants to sell Bitcoin. So if you can add some sort of native yield that's sustainable through block rewards such as Score or Babylon or these unique hash time lock staking mechanisms, it's real yield, not some sketchy centralized lending market thing. That's a great way to get some yield, and it changes the economics of everything. Whether you're a TradFi institution that's offering structured products based on these yields to investors or on-chain money markets, it just changes absolutely the economics of everything. So I think it actually enhances Bitcoin, and you're going to see folks wanting to hold the LST. So if you're a market maker, if you're an insto, if you're a retail user, you're just going to want to hold the LSD. You're going to want to use that as your collateral asset as it's accruing yield, and you're going to want to borrow stables against that because it just makes economic sense, and it just enhances the asset that much more.
So some key takeaways from that, because again, this is a space that is relatively nascent and not a lot of people in the XRP community understand it. He particularly mentioned that Bitcoin is a negative carry asset because previously it never had the ability to generate yield. You never had the ability to go out, put your idle Bitcoin to work, liquid stake it, and get in return a liquid stake token. And then instead of selling your Bitcoin, go out and utilize that liquid stake token as collateral in the DeFi ecosystem to generate more yield or participate in other DeFi strategies without having to actually sell your Bitcoin. The other gentleman mentioned that liquid staking capabilities for Bitcoin is actually positive, especially for people that want to accumulate more Bitcoin, because you're generating yield with that Bitcoin and you literally can accumulate more of said digital asset. Think of that in terms of XRP, because XRP was the same exact way. For financial institutions, it was a negative carry asset. Everybody that has been holding XRP for the past 5 to 6 years, at least as long as I personally have, since 2017, has been doing nothing with it. It's just been sitting idle in our cold storage wallets or dormant on centralized exchanges, doing absolutely nothing, collecting dust, moving sideways for however long. And that is negative. That is a negative carry asset. Now, that is all changing with the introduction of F assets, Flare's capabilities that are being introduced to the XRP ecosystem, and so many other DeFi primitives being built out on the XRPL, like the introduction of the XRPL EVM sidechain. That is all changing for the first time ever, and more people need to wake up in the XRP community and understand this. So taking into consideration what that gentleman on stage said, listen to this panel discussion from the Flare community called June Recap as to what's coming, in collaboration with a couple of these individuals from the Flare ecosystem. Just take a second and listen, because this is identical to what the gentleman on stage said a couple of months ago back in April.
Why is this possible? Well, if you think about capital as a whole within finance and DeFi, there's really this thing that sticks in most financial managers' minds, which is the risk-free rate, right? So when you have the US dollar and you're looking at yields and you're like, well, this specific stock can return me, let's say, 6%. But if the treasury yield or the risk-free rate, which is generally the 10-year treasury, is returning you 4%, your risk to reward ratio is essentially you're only earning 2% over the specific treasury or the 10-year, right? With XRP, there is no risk-free rate, right? You're simply just holding the asset. So the hurdle rate all of a sudden is 0%. Today, no one earns anything on XRP. So when you introduce yield to it, there's essentially a competitive barrier that we have for percentages that we're willing to deliver back to XRP, that functionally any other assets in crypto generally don't have, especially if they have native staking, right? So if you're deploying ETH today or you're deploying Solana today, there's a set amount of staking yield that you earn. So if you're deploying it anywhere as a capital asset, you have to earn at a minimum that staking rate or more, right? With XRP, there is no staking rate. It's just 0. So all of a sudden, we're unlocking a capital asset that has a risk-free rate of today, which is 0, right? Obviously, to earn some yield, there's risk involved, right? Like there's some risk, but obviously you can hedge those things, et cetera. But nonetheless, that's generally how I think about Flare as an ecosystem.
Flare is unlocking DeFi capabilities with XRP, turning it from a negative carry asset to something that is going to be able to generate not only retail investors, but also institutions passive income. Now, let me show you guys this industry leading expert from another video that was uploaded from Crypto Valley, April 7th, 2025, only has 75 views. What I'm trying to show you guys in this information, especially here in the CYPRX 1228 Club community, is that hardly anybody is paying attention. Especially in the XRP army, what you will see is the content that exists on the internet surrounding XRP enthusiasts is high price projections, Fibonacci trading analytics to tell you guys that XRP is going to go to $15, $100, $50, whatever the case may be. Put that mindset aside and understand that it doesn't matter if XRP is $1, doesn't matter if XRP is $50, doesn't matter if XRP is $1,000. You don't have to sell your XRP anymore. And instead, you now can utilize the F assets ecosystem. You can go out and you can liquid stake your original XRP and in return get an STXRP asset or a liquid stake version of your XRP. And you can go out and utilize that in the DeFi ecosystem without ever having to sell your original XRP while it's earning yield. If you don't understand how powerful that is, again, ladies and gentlemen, please, this is a wake-up call. This is existential. This is huge for XRP holders. And too many people are sleeping on this because they don't understand the mechanics behind it, which is exactly why we created the Wealth 28 Club, for you guys to educate yourself, for you to see how we are already in the now earning passive rewards on our digital assets. So that way, when you're comfortable with the regulatory environment, when you're comfortable deploying into the DeFi ecosystem, you can do exactly that with knowledge, education, and power behind it. So who is this industry leading expert right here? This is an individual from an organization called Bitvavo. Now, just to show you guys that I play video clips with people from organizations that have credentials, if you head over to the Bitvavo website, okay, it talks about trading the future. And then here it mentions security and account guarantee, legal compliance. So they offer up to $100,000 in investment insurance on user accounts on this platform. And they are in compliance with MiCA regulation. You can see Bitvavo is an authorized crypto asset service provider under regulation EU. MiCA by the, I'm not going to butcher this. I believe that's in French, maybe. Yeah. And so you can just see that they have regulation. And then right down here, they also mention on their website at the bottom that Bitvavo is one of the European market leaders and offers tailor-made services for institutional investors and crypto funds. Okay. So this is coming from an industry leading expert that stems from an organization that tailors to institutions, has regulatory clarity, and provides insurance for their users up to a certain amount. So take a second and listen to what she says, because she confirms that institutions will want to generate yield on their digital assets.
Saying, and I'm going to loosely translate because it might sound a little bit crass or rude, but literally, like any consumer or buyer, what we want is we want it cheap, good, and fresh, right? When we turn up at any marketplace, right? From age to all time, and that hasn't changed. So from a retail perspective, they still want it cheap, good, and fresh. What I mean by that is they want to have the ability to access and work their crypto assets in an efficient way. So the ability for them to be able to use that as collateral and borrow without having to sell away the asset, right? So leverage, and the ability for them to work their crypto the same way. So yield is also very important to them. And then in terms of the good for them to work their crypto the same way. So yield is also very important to them. And then in terms of the good,
without having to sell their digital assets, being able to put their assets to work and generate yield. All right. So now to full circle back to my post where I talked and mentioned about now we have the ability through Firelight, Flare Network, F assets to stake our XRP, in return get a liquid stake token, then go out in the DeFi ecosystem and utilize it for different DeFi primitives, lending, borrowing, trading on DEXs, providing liquidity, so on and so forth, other yield-bearing opportunities. Well, Firelight just put this out. And if you guys have watched video breakdowns on our page before, we touched on this. And so I just want to full circle back to starting with this post, something that we talked about previously. They just confirmed this isn't, and this is huge. Firelight protocol is incubated by Centaur HQ and Flare Networks, who are the main contributors to its IP and development. Centaur was formed through the merger of Into the Block and Trident Digital and is backed by a $25 million Series A round. you can see that they posted this on July 16th, 2025. As of time of recording, it's the same exact date, July 16th. Depending on when you're watching this, it may be a few days / weeks old, but understand how massive this is. Why? Because if we head over here to Centaura, previously Into the Block merged with Trident Digital to form Centaura, an institutional grade DeFi platform. So this is, again, more proof that institutions, they're in the process of building out the infrastructure so that institutions can use DeFi. Okay. And you see Firelight, who are they incubated with? Centaura building out with other organizations, DeFi platforms. Do you guys see this? This is huge. With Trident Digital, they're building out DeFi infrastructure. So if you come over here, you can thoroughly read through this. This is from May 6, 2025. Why is this so important? Today marks a defining moment in the evolution of Into the Block. We are thrilled to announce our merger with Trident Digital and the completion of a $25 million Series A funding round. This milestone accelerates our mission to bringing institutional adoption to DeFi and unifies two pioneering teams under a new banner, Centaura. Now, with that being said, who is this in collaboration with? Trident Digital. If we go back, do you guys remember June 12th, 2025, what Trident Digital announced? Trident Digital announces up to $500 million of financing of a plan for XRP Treasury and appoints Chance Securities LLC as the strategic advisor. And what do they plan to do with this strategic investment? It says right here, this initiative will focus on the acquisition of XRP tokens as a long-term strategic reserve, the deployment of staking mechanisms to generate yield, and deep engagement within the Ripple ecosystem. Do you guys see? This is physical confirmation that these organizations that are going to embed large amounts of capital into this crypto ecosystem are not going to want to sell. They are going to want to generate yield. So think about that. All these people that have been so manipulated into believing that the previous 4-year cyclic events that have taken place in crypto are going to continue to happen. When trillions of dollars come flooding into this space, they're going to sell for fiat and think that they're going to get some opportunity to enter back into the market at some very discounted, heavily discounted price. That is the farthest thing from the truth. And I'm telling you guys right now, I'm warning you all, if you do not educate yourself on what's going to happen in the near future in this digital asset ecosystem when the market's sitting at 10, 15, 20 trillion dollars, thinking that you're going to get a multi-trillion-dollar pullback to enter back in with your fiat capital at a discount, you are watching the wrong influences on the internet, okay? With that being said, learn how to utilize these DeFi strategies so that way you never have to sell your digital assets. You remain liquid, you remain capital efficient in the crypto ecosystem. You hold on to your native digital assets while getting in return a liquid stake token, and then being able to go out, pay yourself passive income with that yield, and continue to navigate in the crypto ecosystem efficiently and effectively with your liquid stake token, which is just one of the many strategies that are going to become available to us as retail investors, which is why I encourage you guys to go out and educate yourself on these platforms. I do not encourage you guys to go out there and use these platforms yet, unless you're obviously, of course, educated enough and trust your own abilities to do so profitably. But I do encourage that you guys go out there and read these documents. Centaura just posted this July 14, 2025. It is a full fundamental piece on Medium that talks about in detail what Firelight is. Go open it, read it, understand the opportunities that are going to become available to you, understand the roadmap that is ahead. You can see some of the dates as to when these things are going live. So that way, by the time they go live, you can be either ready or willing to test them, or just educated enough to understand the opportunities that are available to you in the moment. Again, as always, bringing you all some of the realest information in the game. And I'll end it here just to show you guys that it's not just the Ripple and XRPL community that is interested in DeFi. So here we have a video panel discussion from Tokenize This 2025 from May 2nd, 2025. Only has 119 views. And right now you're going to listen to the Senior Director of Tokenization at the Stellar Development Foundation also tell you guys, for anybody that holds XLM, that their focus is also going to be on yield generation in the near future. Take a second here and listen to this gentleman speak.
And that is changing. I think, within 18 months, we're going to see retail's interactions with this stuff go from basically non-existent to significant. And we still haven't seen it yet, but this is one of these things where we're going to see it in the short to medium term. This is not something we're going to have to wait a very long time for.
And some food for thought, things that we've seen on the Stellar ecosystem that I think are not ready yet, but are interesting gray zones to explore, not from a regulatory, well, maybe from a regulatory perspective as well, but gray zone in the sense that it's still early days, is using yield assets as trading pairs or staking assets on DeFi. So we sometimes use different terminology for almost the exact same use case, because there's a lot of like yield farming or staking, which is just a way for you to hold something that is yielding interest and also trade in the same on the same asset, and that's margin trading or collateralization, just put it in different terms. But you're stuck with other risks, right? Like the native asset risk or the node risk or whatever. So if there is a situation where a money market fund could be put as liquidity on Uniswap or used as a collateral for a DAO protocol, you're actually now holding a very secure asset that's yielding you 5-4%, whatever the underlying asset is, and you're still doing whatever funny things you were doing on DeFi before. So that's one use case. And the other one, which is very near and dear to Stellar, is remittances. So we sometimes don't know, and maybe for the fact that it's not reported, how much cross-border and not only humanitarian, but just family remittances are going out of the US and other countries using not only Bitcoin, but stable coins, right? And to a certain extent, the receiving side needs to have some sort of knowledge, because they're getting a stable coin and not cash out of a mom and pop store. But if they could get something that is easily convertible to local currency and would still earn some yield, you're doing also, to a certain extent, a social benefit here, right? Because they're making more money out of that hard-earned pay. So I think those are two interesting use cases that could benefit from our creativity here, both.
So these are not just XRP developments. This is also coming to the Stellar ecosystem in the very near term. This is coming directly from a Stellar representative. So you guys heard it all here first. If you guys are not paying attention to these evolutionary DeFi primitives that are being brought to said digital assets that have been previously otherwise sidelined from the DeFi ecosystem, start to pay attention. Lock in with us here in the CYPRX 1228 Club. Head over to CYPRXtrading.com. Go through our DeFi University. You will not regret it. You will learn so much information, and you will become powerful with knowledge. With that being said, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support, and I will see you guys in the next video breakdown.